Hey, welcome back to Midas Letter Live. My guest in this segment is Greg Engel. He's the CEO of Organigram Holdings, trading on the TSX Venture under the symbol OGI. Greg, welcome back.
Thanks for having me again, James.
Greg, you just released third quarter results. Give me an update. What do you think?
Well, a couple key things. I mean, great quarter for us, and really some exciting things in there. I mean, I guess one of the keys would be that we continue to see, due to our record yields, our cost of goods continue to come down. So, our strategy as a major indoor producer or premium product has gone forward and has been very well accepted in terms of preparing for the adult rec market. But at the same time, we've driven down costs. So our cash costs right now for the quarter reported were 66 cents, and then an all-in cost, including amortization, down to 80 cents, which we believe is one of the best in the marketplace, whether or not you're a greenhouse or indoor producer. And we're showing as a major indoor producer, we can actually compete with the greenhouses, or maybe potentially be better. I haven't seen any numbers that have come out better than what we presented today.
Yeah, I always find it interesting when people try to differentiate a greenhouse from indoor, because every greenhouse I've been indoors. And so it's just glass walls versus other walls. So yeah, well, that's interesting. That strikes me as among the lowest costs, all-in costs per gram production of the whole sector.
Yeah, it is, and I think what's really driving it is, again, our record yields is a big factor, but also our efficiency, right? I mean, you've been to our facility a few months ago, and you've seen what we're doing, not only from our unique three-tier production, but also how we're managing our plants, how we're treating each of the strains very differently, and how we're processing as well, right? And that's all having an impact in terms of keeping our costs down and allowing us to continue to really produce a premium product, but at the same time at a very low cost, which is phenomenal for the marketplace.
Sure. So you're all set for the recreational market in October. You've got shelf space in Nova Scotia.
Yeah, our agreements to date. So we've got agreements that we've announced in New Brunswick, PEI, Manitoba, and Alberta. And we're actively pursuing agreements right now in Ontario, Nova Scotia, and Newfoundland. And then potentially with private retailers in Saskatchewan, because certainly individual retailers in Saskatchewan are looking to kind of sign agreements. So we expect those agreements to be in place in the not too distant future. But again, we can't comment on whether or not we've gotten an agreement or not. Right. They're target markets for us, right? So certainly we're really positioned. But also we've been building up inventory. I mean, that's one of the key as our yields continue to go up in terms of where we're at. We're well positioned to be able to meet that demand when the market launches. We expect first shipments to happen in September, as both the Crown Corps and the private retailers are looking to kind of stock shelves and prepare for an October 17th launch. So, and we're well positioned in terms of our total production capacity. Great news for us as well is not only has our phase 2 been online since February, but our phase 3, which started to come online in June, we'll start to get our first harvest in August. So we'll actually have product from our phase 3, which brings our total production capacity up to 36,000 kilos right now, so on an annual basis. So we're in a great position for launch of the market, and we're going to be in a great position to supply the market with a premium indoor product going forward.
Fantastic. Yeah, I'm actually looking forward to trying the recreational product. The advent of Doug Ford claiming that he's going to make the whole Ontario market, which arguably is the largest market in Canada, privatized. Does that, in your view, represent an extraordinary opportunity relative to the alternative of supplying it through the Liquor Control Board?
Well, from what I understand so far from media reports is that still the OCS is going to play a role, and they're primarily going to be, if media reports are correct, going to be the mail order supply as well as the wholesaler. And I do believe potentially there are still going to be some government-run stores. I don't know for sure because we haven't had a final confirmation. All we've heard out of some of the announcements is that there is a plan to look forward to private. I think from a market opportunity, I think it's very unique, and one of the challenges is going to be that to be ready for October, we know those private stores aren't going to be up and running, right? So what is that time frame? So Ontarians are going to have to primarily rely on mail order for, I'd say through the end of this year in most cases. So that's going to be a bit of a challenge from a launch perspective. But I think going forward, it does present some opportunities. It's certainly from a government perspective, they don't have to put the capital resources in, and they're going to be reliant. But it's yet to be determined which model they're going to follow. Is it going to be, an Alberta model with, with a series of, an almost unlimited number of suppliers, or is it going to be a Manitoba model where you've kind of picked a number of key suppliers? But I think at the end of the day, it's, I think on one hand, it's unfortunate we've seen OCS and we'd seen their plans of what the stores look like, and they were very focused on training their staff and making sure the experience was one that consumers walked out with a very positive. So we'd ideally like to see a mix of those OCS stores and some private retailers at the same time, because they'll both bring a different experience. So.
Sure. And your branding strategies, you seem to be sort of ahead of the curve on that as well, with the differentiated brands, the Trailer Park Buds, the Anchor Organics, and then of course the Edison Cannabis. Are you finding that the uptake from your existing client base is appreciating the rebranding and sort of on side with that, or are they exposed to it at this point?
Yeah, so I mean, they're certainly exposed to it, but one of the keys that all the provincial jurisdictions and the federal program is relying upon is that you're going to have different brands in terms of the rec market and the medicals, right? So it's key that you have different brands, and I think, you know, it's important from a messaging perspective that you do separate. We did test the Edison brand in the medical market as the Edison project by OGI to see where consumers looking for, you know, a premium, handcrafted, hand-trimmed, you know, high terpene profile product. And now we're transitioning that product into the Edison Cannabis Company and the reserve version of that as well. So far, the response to our branding has been phenomenal, both from, you know, the public retailers, you know, the Crown Corp stores, as well as the private retailers, and at some of the conventions and consumer events that we've seen. So, you know, for example, at LIFT and some of the other conferences, we've seen phenomenal response from the potential consumers to our brand strategy.
Yeah, so there is a large demand for premium, high terpene, high THC content bud.
Absolutely, and I mean, we have you know, a partnership with a company in Colorado called the Green Solution, so we have an understanding of kind of what their sales look like, and you know, 4 years in, we saw product supply outpace demand this year, kind of at the end of last year, and we know that there's been some price compression on the low end, but certainly from a premium flower perspective, and that's why we made a decision to really focus on indoor production, is that they're still sustaining a $14 per gram price in Colorado, even when there's you know, an oversupply in the market, and that oversupply is impacting the kind of lower end product certainly. Sure,
but the higher end product retains its high margin.
It does, and I think, you know, because again, and I think that's where we're uniquely positioned. It's really only ourselves and Kronos and Canopy to some degree that have really kind of continued to expand with large indoor facilities, although Kronos recently announced they're also adding a greenhouse. So I think with our cost of goods and producing, you know, a premium product at a low cost really puts us in a great position for this marketplace.
Yeah, you bet. The onset of the recreational rules is, you know, in October. Will that start to show up on balance sheets in calendar Q4, or will it sort of have to wait and see until Q1?
Yeah, what we're going to see, so all the discussions that we've been having with the various provinces that we have agreements with, or provinces that we're looking to target agreements with, is they're expecting shipments in September. So kind of mid-September, they'd like to fill their warehouses and start to stock shelves. So you're going to start to see revenue, and that's why it's important to have, you know, a supply and have, you know, inventory built up, which we've been doing, both on the, you know, on the dried flower perspective as well as, you know, the oil side. And we also are doing something very unique. We, you know, I think we've only seen announcements out of 1 or 2 other companies, working with a company on a custom-made, bespoke pre-roll machine that's going to be capable, that is capable of producing up to 8.5 million pre-rolls a year, and also has downstream packaging as well in a child-resistant form. So I think, you know, being prepared for that, having everything in place, it's not about just what you can produce, but you've got to be able to package it and have it labeled and ready for the market. So.
Sure. So is the model generally with the liquor control agencies and the whatever the alternatives are, is it generally COD, you ship the product, they receive it, they pay for it, or they pay in advance, or do they pay once it's sold?
No, primarily it's all prepayment, certainly.
Okay,
so you're paying at the time that when you ship. I mean, there's terms associated with that, as you would see with any, as almost like a consumer packaged good. So those terms are typically 30 days kind of payment. You know, and there are some slight differences in terms of distribution, in terms of, are you shipping directly to a warehouse, or are you shipping, you know, for example, we're based in Moncton, so for New Brunswick, we're going to be shipping directly to each of the 20 stores that they have up and running. But beyond that, in most places, we're shipping to a central warehouse. So it's a great partnership for us with NB, you know, the province of New Brunswick. So.
Sure. And then on the other side of the premium flower spectrum is your investment in Hyacinth. And I'm really interested in Hyacinth and what they're doing, because if they are able to provide the whole range of profile of CBDs and THC as ingredients in, you know, micro sort of dosed concentrations, then that's arguably a game changer for the whole industry in terms of edibles and vapes and whatnot. So what is the progress there?
Yeah, so Hyacinth, we expect that deal to close in the next month, so in August. And so for those of the viewers not familiar with Hyacinth, they're a biotech company based out of Montreal that are working on biofermentation, which is a proven methodology producing vitamins and insulin and other biological pharmaceuticals, where they're taking the gene that is the precursor for olivetol, which is a precursor for THC, CBD, CBG, and through a proprietary enzymatic process, fermenting that production and then converting through enzymes. So you can actually get a pure THC or a CBD or CBG or potentially other cannabinoids as well, right, as they continue to evolve. So they've proven that at a lab scale. The technology's proven at a production scale. So the next steps for them will be optimizing their process with a contract manufacturer and then having their own facility built out. And this is potentially a very disruptive technology, right? It's we could produce, Hyacinth could be producing cannabinoids at pennies on the dollar in terms of plant-based. And the advantage to that is that it's a very pure form, could be used as an API in a pharmaceutical, but also, as you alluded to, could be used in vaporizer pens or edibles or those products. And or you could mix it with a plant-derived extract as well to kind of get some of that terpene mix and minor cannabinoids at the same time. So exciting times. We expect that deal to close in August, and they're a great partner, and we look forward to working with them. And with that agreement, we can get up to 25% of the offtake at a discount to the market price. So we're not the only company they'll be supplying, but I think there's a huge market for them.
And your interest in the company?
So we haven't fully announced all the financial details. We'll be doing that once the agreement's closed.
So we'll keep our eyes peeled for that. All right, Greg, that's a great update as usual. Congratulations on a great quarter, and we'll look forward to having you back soon.
Okay, thanks, James.